question, and I wrote more here than you probably need. Exercise 10-7 is on page 438. I'm sorry, not 438. That's problem 10-7.
432.
432, 10-7, bottom.
Can you break that into normal person English?
Can I break this into normal person English, okay?
Or in my English?
Well, let's go through it and see what doesn't make sense. So, explain or illustrate how the following items should be reported in an enterprise fund statement of revenues, expenses, and changes in fund position. So, example, on pages 422 and 423, right, there is a statement of revenues, expenses, changes in fund position, and the detail for that. Okay? Do you see that? 422, 423?
There's nothing listed that says under this. Says depreciation on capital grant, finance, capital assets.
Right.
You go to that page, it just says depreciation.
Okay.
So
what would be your guess then? Where does depreciation go?
they have a depreciation under all the headings.
Okay, and all those headings go where? What is that the detail of?
Operating expense?
Operating expense.
Yes, I do.
Okay? So number one, depreciation on capital grant, finance, capital assets of proprietary funds must be reported as an operating expense. So if you would just put operating expense, put operating expense, that's fine.
Now we don't have to put all this other stuff?
You don't have to,
Oh. Okay. That's good to know.
but it helps explain it. Right?
You already know you already know. So
Sure.
I need to explain it to you.
This?
Well, like you got,
No, if you just put operating expense, that's fine.
okay,
That's
so it
fine.
looks like you've got like 5,000 paragraphs.
Well, I explained, I mean, there's explanation behind it, right?
Can we do a few more just so I can figure
Sure.
out what the hell I'm doing?
So the second one, depreciation on infrastructure assets. Where do you think that goes? Take a guess.
Is that
That's operating.
another operating expense?
Okay? Because you see depreciation on 423 under operating expenses. Okay? Operating expense. Now, if you read your chapters, there is a modified way you can do it where it doesn't go under operating expense, but I'm looking for operating expense. Okay? Because in most cases it would go under operating expense. Number 3, transfer from other funds. 422, where does it go?
Does it depend on where it's being transferred to or from?
No. All transfers go in the same area.
Income before revenues.
Other financing sources.
So it goes after the income before the non-operating revenues, right? But before the change in net position. Okay?
Could that also be labeled as other financing sources, or is there certain?
They're not here on this statement. So you can just
Well, no, I'm saying, could you just put like OFS instead of all that other stuff, or what?
No. And the reason is because you can't include all of those pieces under those other financing sources for a proprietary fund. Okay? They just have that section, that segment of lines that are, in essence, special items or extraordinary items, right? They go down there. So you can just put reported as the last item before changes in net position, or just before net position, or after non-operating revenues, or however you want to put that. Okay. Number 4, cash proceeds of short-term note issuances.
Revenue?
Where did it go on other stuff? Have we ever recorded cash proceeds from short-term notes? No. So it doesn't go. Okay. Number 5, retirement of bonds payable of the fund. Do you see it anywhere on page 422?
No.
So your guess would be
Also not reported.
it doesn't go. Okay? Number 6, routine annual transfers from other funds. That looks a lot like number 3, right? So before net position, transfers are transfers. Number 7, gain on sale of capital assets. What do you, based on 422, where do you think that goes? Special item. Do you see a gain on there of a sale of an asset?
Sale on land.
Right.
Yeah.
So it'll go as a special item. Right? There is a way, under certain circumstances it can go under non-operating revenue. Okay? Depending on what type of asset that is. For here, you have 422 as an example, we'll go with that. Okay? Number 8, loss on advance refunding of bonds. Do you see that anywhere?
Is that interest expense?
No.
Okay, it operates a lot like interest expense.
Is it even up there?
Where would you, it's not on 422. It's not on 4, they get progressively harder as they go through the problem. Right? So your example falls away a little bit. Losses or gains on advance refunding are reported as ordinary losses in the period of refunding. Okay? If the refunding happens in another period, it's going to be a deferred inflow or outflow. Okay? Remember those don't show up. Right? You guys said that in your presentation, deferred inflows, outflows, not relevant. Okay? But in this case, it happened during the period. Okay? So it's going to go under an ordinary, it's going to go as an ordinary loss or gain. Okay? And the ordinary loss or gains go, where do you think they would go?
Non-operating.
They're amortized as a function of interest expense, and interest expense is non-operating. Okay? So that was a good connection with the interest expense. Number 9 gets a little more convoluted yet. Restricted grants received that can be used for operations or for capital asset acquisition. Assume 30% was expended during the year, 30% to cover operating expenses, and 40% has not been expended. So, since they're operating grants, they're going to be reported as non-operating activities, which you can see on 422 under the intergovernmental grants. There's more detail to that, right, because it's split up. But if you said non-operating revenue, that's fine. Okay? Because the 40%, there's 40% of it that hasn't been earned yet, right? Has not been expended. So we know that that's a deferred, right, inflow. Okay? The last one, number 10. Entering into a capital lease with a capitalizable cost of $4 million on the last day of the year, assume an initial payment on that day of $1 million. So, where does that go? Do you put a capital lease anywhere on your statement of revenues, expenses, and changes?
It's not an operating expense.
You don't. It doesn't go, right? Because it's a long-term borrowing. It's the same. It's the same as you would do, right, for an accrual method for a profit company. It's long-term borrowing. You're not going to put it on your income statement. Okay, so it's not going to go on there. In the future, your interest expense would go on there, right? And we've talked about that. But for now, just paying the capital lease isn't going to go on your statement of revenues. Okay?